Hey guys, what's going on? Jeb here, and in today's video we're going to be doing a little bit more technical analysis on Bitcoin because, as you guys know, the last week or so has been extremely bullish for Bitcoin. Bitcoin has broken straight through $6,000, straight through $7,000, straight through $8,000, and tested its eventual resistance at $8,400, one of the levels we talked about before all of this began. And during that time, Bitcoin managed to rally dozens and dozens of percent. Bitcoin is still up around 30% above $6,000, and from its low back in February, Bitcoin is up close to 140%. Massive rally for Bitcoin. I think we can all agree on just how well Bitcoin has been doing. But that being said, what goes up must come down, and as we know, markets are cyclical. Bitcoin is not just going to run into the stratosphere and onto the moon and the stars forever. That is not how that works. It's not a matter of opinion. It is a matter of fact. Bitcoin will have a retracement. So in today's video, we're going to discuss what that retracement might look like, and we'll speculate as to when it might come. It's a little hard to determine when exactly a pullback like this will come when there's so much exuberance in the market, but we will go ahead and discuss that in today's video. Guys, I want you to be very cautious of Bitcoin. We're in a very precarious time right now. A lot of people fail to recognize just how precarious of a moment this is for Bitcoin. So in today's video, we're going to be discussing all of that and more. So if you guys do enjoy today's video, definitely consider dropping a like, hitting that subscribe button, and smashing that notification bell, guys. It does help out the channel when you do that, and I would be appreciative if you did it. But without much further ado, let's go ahead and get right on into it. I lied, actually, because before we get on into it, I do need to remind you that there is still that sale going on the Cryptocurrency Technical Analysis Academy. If you use the coupon code in the description down below, you will get access to 33 videos and 9 hours of video content talking to you about everything as it relates to cryptocurrency technical analysis. There is a lot of information jam-packed in here for a very low price, so if you're looking to learn how to do technical analysis moving on into this bull market, I highly recommend checking the link in the description down below. More on that later. Anyway, guys, now let's go ahead and get on into it. Bitcoin is currently trading around $7,875 and change, and as you guys know, Bitcoin ran up to around $8,400, and we're down about 7% from there. The reason that $8,400 is important is because it was actually a previous high on Bitcoin. We can go ahead and draw right here. Bitcoin ran to exactly where Bitcoin had run to in this previous rally over here, where Bitcoin had that inverse head and shoulders pattern. Bitcoin rejected off of $8,400. That's where we're testing resistance right now. And as you guys know, I've been talking about in the last couple of days about how Bitcoin could go to $10,000, but I never made a prediction that Bitcoin actually would go to $10,000, because you have to be very careful about predictions like that in these markets. You have to be very careful about making trades like that in this market, because one thing I really want to talk about in today's video is that this rally, at least a decent amount of it, is not necessarily built off of technicals. The technical analysis was saying that Bitcoin would reject at $6,000. The technical analysis was saying that stochastic RSI would take over and Bitcoin would have had a downtrend by now. The technical analysis is saying a lot of things. The technical analysis was pointing out Rsi Divergence down here before we broke 6K. There were a lot of technical reasons why Bitcoin should not have broken $6,000. But it did. Does that mean that our technical analysis was wrong? Does that mean that we are subpar technical analysts? Just about every single technical analyst on the platform was talking about major resistance at 6K. Were we all wrong? Not necessarily. What we did fail to incorporate, though, because we simply didn't have the data. It's kind of hard to incorporate data that you just don't have. What we were not able to use in our technical analysis was just how much exuberance was going to come when Bitcoin even got close to $6,000. We got close to $6,000. Everybody smelled green, and they started buying Bitcoin, and a lot of people started buying a ton of Bitcoin, and we propelled Bitcoin somewhere around 40% above 6K. Massive, massive rally, and that's a good thing. We did see a lot of exuberance from Bitcoin. We have more than confirmed a Bitcoin bull market at this point. This was a very healthy development for Bitcoin. The fundamentals look great. I think we needed this to happen. I'm not complaining in the slightest, but I do want to remind you guys that what goes up must come down. Markets are cyclical, and Bitcoin will have a correction. Whether or not that's tomorrow is up for debate. Whether or not that's this month is up for debate. But there is going to be a correction. There's no room for debate in that statement. There will be one. And that's what we want to discuss in today's video. When is that correction actually going to come? I want you guys to realize something. Back in 2017, a lot of people like me realized that this was the end of the bull market. If you go back to the very first video that ever went up on this channel, it went up here around 8,000, and it's called "Is Bitcoin Overextended?" And in that video, I was saying we didn't have a very big pullback. Bitcoin needs to have a pullback, or something bad is going to happen. And eventually, I was vindicated. A lot of people kind of made fun of me for that, but eventually, I was vindicated because a bear market started about a month to the day after I made that video. Bitcoin was rallying in a very strong way. and some people did realize that Bitcoin was going to have a correction and that a bear market was coming. But at the same time, there were a lot of people who thought that Bitcoin was just going to go up and up and up and up and up forever on into the stars because Bitcoin was going to 100K or 500K or a million or whatever. There were a lot of people that were putting ridiculous price targets out there, and they started buying Bitcoin. And I want you guys to realize something. These people that bought this Bitcoin up here above $8,000, even a year and a half on, are still at a loss. They are still below their break-even point. They've still lost money, because they got over exuberant, because they were buying Bitcoin based on their emotions, not based on the technical analysis. And what did we talk about a second ago? Well, we talked about how a lot of the technical analysis was saying that Bitcoin should have a correction, or that Bitcoin should not have broken through $6,000, or that Bitcoin needs to have a correction now. That's what the technical analysis is saying, but the people that trade based off of their gut, if their gut is not trained anyway, and based off of their emotions, if their emotions are not trained, are oftentimes going to lose, and you have to be very careful of that. So let's go ahead and discuss a couple of different technical indicators and what they say about Bitcoin. One of the first things I want to talk about has to do with Rsi Divergence. You guys know that I'm a very big fan of Rsi Divergence, even though it failed us relatively recently. That was because of just a crazy amount of exuberance in the Bitcoin market. Pretty much every technical failed during that, but you know that happens sometimes when Bitcoin starts running in a massive run like this. But technical analysis is still obviously very important, and we've cooled off a little bit, so I do think it's a good idea to look at this. Bitcoin, as you can see right here, has set a double top at $8,400. You can draw that kind of with a trend kind of, but really it's just double topped up there. That's basically what's going on here. Bitcoin has a double top. And if you guys go ahead and look down here on the hourly RSI, we're seeing a lower low. That's not a good thing, because that lower low accompanied with this double top is actually something called exaggerated RSI divergence. Now, we don't talk about that a lot because normally RSI divergence doesn't happen when you have a double top, but right now we are seeing a double top, and we are also seeing a downtrend on the RSI. That is a form of Rsi Divergence, and that unfortunately does mean that Bitcoin should be having a retracement right now. That's what the technicals say. We'll discuss what everything else says in a second. Bitcoin at the same time has a downtrend here and a downtrend on its RSI, but you could also kind of call this right here an uptrend and this the downtrend on the RSI, meaning that there's also Rsi Divergence on the 4-hourly chart, meaning bearishness. I don't think there's a whole lot on the daily chart because this is such a short move, but the point I want to make here is that the Rsi Divergence on the hourly chart and the 4-hourly chart is calling for some kind of correction that should last between 3 to 10 days or so. That's basically how long this takes when you're looking at these different intervals on the hourly and the 4-hourly, especially the 4-hourly. This can play out for the course of about a week, and then it can, of course, exacerbate into something a lot bigger. But we are seeing that Rsi Divergence. Another thing I want to point out has to do with the MACD. If we come out to the daily chart, what we'll see is that the MACD, for the first time, has actually started closing in on itself. As you guys can see here, MACD has been doing nothing but running green ever since back over here on the 29th of April. It's been getting further and further and further and further bullish here on the histogram. But today, we'll see what this daily candlestick does. We've actually seen a downtick in the MACD, which means that the MACD could start curving in on itself, and perhaps we'd see a bearish cross in the next couple of days. One thing a lot of people forget about MACD is that it's not just the crosses you want to look out for. The crosses are actually lagging indicators. It's where the movement starts shifting on the histogram where you actually get some of your best signals. Right down here, we got a signal of bullishness on the 29th of April, but if you had waited to the cross, it would have been the 3rd of May. And if we bring up the chart, that misses out on a bit of bullishness right here, this little move right here, that if you had looked at the histogram instead, you would have had a more early warning sign, and you would have been able to predict that bullishness with 4 or 5 days advanced warning. It's important that you're able to do that with a MACD. Guys, there are a couple of other technical indicators that I can get to, but I honestly don't think I need to. The point I want to make here, and I want to make myself very, very clear because people often misconstrue what I'm about to say. There is a good chance that Bitcoin does continue this rally and does go to $10,000. That can happen. I'm not writing that off. I'm not saying that's impossible. That can and very well may happen. But look at this chart. What does this look like? See what Bitcoin did here yesterday. Do you remember what I said in yesterday's video if you watched it? I said Bitcoin was moving into a consolidation pattern. I said it was moving into this one specifically right here, and that we were going to see a breakout. And when we saw that breakout, as I talk about with many breakouts from consolidation patterns, that is a moment of clairvoyance. That is a moment where we can determine whether or not Bitcoin is going to go bullish or bearish, and how strong the bulls and the bears are themselves. If you're in the Cryptocurrency Technical Analysis Academy, this video, gauging the strength of the bulls and the bears, we discuss how to understand which faction is stronger. Are the bulls stronger or are the bears stronger? That's a very important concept. That's why that's a video in CT2A. It's extremely important that you're able to determine which faction is the stronger one, because typically the stronger one is going to be the one in control of the market. And one of the ways that you can figure out which one is the stronger one is wait for a breakout and see what happens. Observe. Bitcoin broke bullish here. That's a good thing. Bitcoin broke bullish out of this consolidation pattern, so you might think, okay, well, the bulls have control. But how long did they have control for? 1, 2, 3, 4, 5, 6, 7, 8. 8 candlesticks. They had control for 8 hours. That's how long they had control for after a breakout when we're in a massive bull trend. That's actually not really a good thing for Bitcoin, because as we can see, the bears have managed to take over here in these last couple of days. If Bitcoin was really as bullish as it had been a week ago, for example, I think this uptrend would have held and Bitcoin would have broken $8,400 and we'd be on our way to $10,000. The fact that we rejected from $10,000 sheds a lot of light on how strong the bulls are and how strong the bears are. And guys, part of this is coming from my own experience in trading, and if you're a more experienced trader, you'll know what I'm talking about. Oftentimes when you see this pattern of a bullish breakout of a consolidation pattern followed by a bearish break of the uptrend, that is almost always a bearish sign. I'll give you an example that happened about a month ago. If we look back over here into April of 2019, not 2017, we'll see that Bitcoin had a consolidation pattern right there with a relatively flat top and then an uptrend of support. And as you guys may or may not remember, Bitcoin rallied and broke a bullish. We broke bullish out of this, and then very quickly we broke bearish. Now, one thing you may be saying is that, yes, well, Jeb, Bitcoin traded sideways and then went on a bull market a month later. You're right, but this is a short-term indicator. This indicated bearishness for the short term, and by short term, I mean from like this time period to like that time period. It traded sideways. Bitcoin did not move to the upside because we saw over here that the bulls were not that strong. And that's what we're talking about right now. The indicator that we're looking at right now doesn't necessarily mean that the entire rally is going to come falling down, but it does mean that the bears on the shorter term frames, on the shorter term time frames like the hourly chart, are the ones that are that are slightly more in control. The bulls are still in control. A lot of times when this happens, it's a bearish sign, but it does mean that the bulls are still definitely a relevant factor that you need to keep in mind. What all this means is if Bitcoin follows through with this the way it normally does, also taking into account the exuberance, I'm not leaving that out, taking into account all the exuberance that Bitcoin has right now, Bitcoin very well may pull back down here to $7,400, or this may be the top of the rally. I'm not saying that's what's going to happen, guys, so don't go quoting me saying that. I'm not making a call here today. I just want you guys to know what the different scenarios are. There's one scenario that Bitcoin breaks bullish and goes to 10K, and there's another one that Bitcoin's rally ends here. We see this double top up here. That's not the kind of thing you want to see when a rally is ongoing, so watch out for that. There's one more thing I want to talk about, and that has to do with mass adoption. That has to do with sentiment. That has to do with the number of people in the space. If we go ahead and look at this news article here, we're going to see Coinbase hits trending on the App Store. The return of mass interest in Bitcoin is here, and this is what I take concern with. There well and truly appears to be a resurgence in interest in Bitcoin and cryptocurrencies as Coinbase's iOS has its trending list on the App Store. And guys, basically what we're talking about here is that Coinbase is trending on the App Store. Coinbase is getting a lot of traffic from people that are entering the cryptocurrency space. But there's one thing I want to mainly talk about that has to do with this, and that is how many people are actually entering the cryptocurrency space. Bitcoin has rallied 40% and about 35% to where we are currently. Are the number of people that are investing in the cryptocurrency space, and more specifically, the amount of Bitcoin being invested in the cryptocurrency space, up 32%? Has the mass adoption, or has the interest of Bitcoin rallied 30%? I don't know. Maybe it's rallied 10%. Maybe it's rallied 15%. Maybe it's rallied 20%. I'm not sure if it's rallying 30%. I'm not sure if we have enough new people in the space yet to warrant this kind of movement. Maybe we do, maybe we don't. But we want to keep in mind that graph that I've been talking about for over a year now. The graph of Bitcoin's price action going down and the graph of Bitcoin's fundamentals. One of those very important fundamentals that you see is the number of people in the space. How many people are in the cryptocurrency space? How much money can potentially be invested in the space? How many wallets are there? These kind of statistics that are sometimes very hard to get. How large is the cryptocurrency space? And I'm not totally sure that Bitcoin's fundamentals in those sense have gone up faster than Bitcoin's price action. Seems to me that Bitcoin's price action has gone like this, and the fundamentals have gone a little something like this. We're over that underlying intrinsic value on the short term for right now. I really wish there was some way to graph that. I feel like it would look something like this, where we see Bitcoin's underlying intrinsic value, and we see something like that maybe. However it looks, I think we're over it on the short term, but it is still rising in a very bullish way. I do want you guys to realize that there is a good chance that Bitcoin has a pullback here, and I don't want you guys to FOMO in just because I talked about $10,000 in yesterday's video. I talked about $10,000 because there is a good chance that Bitcoin could go up here. There's always a good chance that something like that can happen when we're in this kind of rally. But I want you guys to be careful also, because if you FOMO into this market and you buy right now based off of your emotion and Bitcoin falls through the floor and you don't have stops to protect yourself, you can lose a lot of money. There's still people that are holding on to bags from $20,000, and luckily for them, it seems like they're going to be in profit again if they hodled all the way through this bear market. But even a year and a half on, they're at a loss. You don't want to be in that position, even on a shorter term time frame, even with less severe consequences. So keep that in mind. Be careful to keep your emotions in check, and whenever Bitcoin or any other market goes on a gigantic rally like this, the end of the rally is not the time to be buying. The end of the rally is the time to be shorting. Now, I'm not saying short this top. I'm not saying try to call this top because that's very difficult, but this is not the time to be buying your position. The time to be buying your position was back over here on the 2nd of April when we had a massive breakout, or over here on the 9th of May when we broke $6,000 with a lot of exuberance. That was the time to be doing that, not now. Be very careful with how you approach these markets, guys. There's a lot of money to be made, but because there's a lot of money to be made, that also means that there's a lot of money to be lost if you're not very careful. I don't want to scare you, but you do need to be sure that what you're doing is correct and that you're not making too big of mistakes. With all of that in mind, guys, that is why I made the Cryptocurrency Technical Analysis Academy and why I spent literally hundreds and thousands of hours of my life learning about technical analysis so that I could put it into this course and give it to you guys and package it all up with a little bow and sell it to you guys for $119.20. And you may be thinking, Jeb, that's a lot of money, but here's the deal. What you can learn in this course, if you implement all the strategies that I teach in this course, guys, there are 33 videos, 9 hours of content in this course. We cover basically everything you needed to know to get yourself up and running in technical analysis, also through many intermediate concepts and many advanced concepts we talk about in this course. Just one of these lessons, there are dozens of these just one lessons in here that will make you the money back that you spend on the course if you buy into this course and you learn. Here's the thing, guys. A lot of people misunderstand what courses are for. I'm not selling you information. I, the salesperson, will be the first to tell you that everything in this course you can go and find on the internet. That's how I did it. But let me tell you why you don't want to do that. It took me over 1,000 hours and thousands of dollars in failed trades to learn what I learned to make this course. Instead of making all the same mistakes I did and spending literally thousands of hours learning this content, learning this material, learning how to work in these markets, you can learn much of it in 9 hours of content, all put together, amalgamated by someone who knows what they're talking about, in a nice little concise package where you can watch the videos over and over and over again as many times as you want, and you will learn all of this stuff much quicker without spending anywhere near as much money. Because people say, oh, well, I can learn technical analysis for free. Well, yes, you can learn technical analysis for free if you forget all the money you'll lose when you're trying to trade. If you want to go and paper trade for a year and learn how to do technical analysis that way and learn everything that's in that course on your own by Googling things, you go right ahead and do that. That works better for some people. If that's who you want to be and you want to go learn that and you want to do it that way, there's nothing wrong with that. Click off the video right now and be fine with that. But if you want to learn how to do technical analysis and get up to where I am and learn about all of these strategies that we've talked about in today's video and more by the end of this week, then guys, the Cryptocurrency Technical Analysis Academy is the place to go. And by the way, we have a very good thing going here. I'm not going to name any names, but there are a lot of courses out there that have 1 to 2 hours of content that sell for like $500. We have 9 hours of content covering pretty much everything you need to know to get started in the space and become an advanced technical analyst, an early advanced technical analyst, for $119.20 with that coupon code, guys. We have some amazing videos in here. One of the ones we talked about earlier was gauging the strength of the bulls and the bears. This is a very important video. It also goes with gauging the strength of support and resistance, because a lot of people don't realize this. Support and resistance are not created equally, and neither are the bulls and the bears. $6,000, for example, is a much stronger level of resistance than $8,400, even though Bitcoin is testing $8,400 right now, and it broke through 6K. Just because Bitcoin acted like that, that doesn't mean that $6,000 is weaker than $8,400. What that means instead is that at the time that we broke bullish here, the bulls were stronger, and now they no longer are. That's a very important difference that no one really talks about. That kind of stuff that I can't really get into in every single video is what I do get into in this course. That's what I do get into, engaging the strength of the bulls and the bears, engaging the strength of support and resistance. This kind of content doesn't do well on YouTube. If I uploaded this and get 200 views, and the people that watched it would be very grateful, but no one would watch it. So that's why I packaged it into the course, and I'm giving it to you guys, so that you guys can go and learn how to do technical analysis in a concise manner and be ready for this Bitcoin bull market, guys. We all know what happened in 2017. We all know how much money people made in 2017. A ridiculous amount of money was made because people knew what they were doing. I'm not going to lie to you and tell you it's going to be easy. I'm not going to lie to you and tell you that if you watch my course, you're all of a sudden going to be a millionaire. But I will tell you this. It's a place to start. And that's one of the most valuable things that you can get when you're trying to enter a new space, is a place to start. You guys have all started something before and had no idea where to start, and you gave up and quit. And you may have given up and quit on one of the most important opportunities of your life. And I think Bitcoin counts as that. If you walk away from the Bitcoin space right now because you don't know what you're doing, and instead, and maybe you do know what you're doing, but instead you don't even feel motivated to stay in the market, you're going to miss out on a very big opportunity. So guys, do go ahead and check out the link in the description. Use that coupon code 20K2019 at checkout, and you'll get 20% off the course price, and I'll see you in there, guys. We have over 350 people in the course now. Dozens of you guys have joined in the last 2 days, and I'm really looking forward to seeing your pretty face in the course as well. So anyway, guys, that's going to do it for today's video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.